introduced.
We live and
recording,
so,
well, I knew Bill.
No, just kinda
introduced me to you. Yeah, absolutely.
I'll just go ahead and get things started a little bit.
Sounds great.
The speakerphone all the way down the middle, so that way people will hear better, so I may sound a little bit like I'm in an echo chamber here, but we've got 6 agents here on the call in the conference center. Edry's here, you know Ed, Channing Wolf, Richard Jenkins, Andy, and then Kathy Roberts, who's kind of kicking the tires on our organization here a little bit, and just Greg on the line. So we 7 here, but we're the 18. We are the Marines, the few, the proud, the many. So basically, what I asked John to do here knows that Senior Market Sales is who I part with as my top of the line. Both technology support, other product support, just a very well organization. And so, in having some conversations, Ed Carey, he's started to do some annuity sales. Of course, he's got a strong financial background. And so, part of my thought process as always is how can I better equip agents to be able to increase their revenue streams, increase the relationships they have with their clients, by being able to offer more value. And of course, if you can make an extra sale other than being solely dependent on what you're doing in AEP, it clearly improves your living standards and gives you additional hours to use for other things, whether it's marketing, all that type of stuff. So, having said that, part of the money leaving on the table is when we're meeting with our clients that are turning 65 or they've been on Medicare for a while, they downsize, they sell a home, they have all this money, they don't know what to do with, they're risk adverse, they don't want to put it in the market, and they lose 25% in 6 months because of something that happens overseas. So I've asked John, he's an annuity marketer with Senior Market Sales, he's a great guy, very knowledgeable. Just give us a good overview on how annuities work, how we can place in our practice, and just kind of go from there. So, having said that, I'm going to sit back in the passenger seat and let John drive. So, John, you are in control. Take it from here.
Well, I appreciate it, Daryl, and as always, thank you all for taking time out of your day to come in. I like how Daryl has these calls, and you have a chance to learn a little bit more about what's going on, whether it's directly in your space, or in this case, perhaps broadening your knowledge on some of the other products that we offer. As Daryl mentioned, we are a partner with Daryl. Senior Market Sales, we're a 35-year-old organization in Omaha, Nebraska, and we've really built some proprietary tools, a few of which I'm going to go through shortly, some proprietary tools to help our agents, those at or nearing retirement. That's really our focus. So you are our client. We don't really work to consumer. We really work to support about 30,000 contracted agents, which is where we're at today. So we have a lot of agents that focus on Medicare. We have some that focus primarily on life, long-term care, and annuities. And I work on the financial product side, so I am familiar with Med Solutions. However, my counterparts on the other side of the office really focus on Med Solutions, and I focus on the financial products. So today I really want to talk a little bit more about annuities, and this is a webinar I did about a year ago for a few hundred agents of ours, and I've only tweaked it slightly just to update it. However, the recording is out on our website, and Peggy, a nice gal, she writes for Life Health Pro. I don't go out to Life Health Pro or not, but if you go under fixed indexed annuities, I go out here every once in a while just to check a few things out. And week I went out here and I clicked on positioning FIAs, asked the right questions, because that's really what I focus on in my presentation. This article is actually based on what I did a year ago. She wrote an article on it. In fact, I didn't even know she did this. I just went out and saw my name I was referred to in my, it's actually a link to our website for the webinar. So I told her, thought I'm stealing her title because I like this better for my presentation, but I think this is a good place to go if you want some industry knowledge, some updates on what's going on in the fixed index annuity space. I'm going to talk a little bit about FIA sales skyrocketing and VA sales looming a little bit, but I just wanted to point that out, that if you see that article, it's dated a little bit and you're getting the updated version today. So hopefully it's a good opportunity for us to learn a little bit about how you can position fixed indexed annuities. But I'm done asking the right questions. You know, a phrase that I like to use is, I think asking is advocating and telling is selling. And when you can start to be an advocate for your clients, that's really what we're trying to accomplish. And there's a lot of ways to do it. So I'm going to try to give you some of those questions that you can use to uncover some other potential opportunities. Keep in mind, even though, you know, I might be focusing in on indexed annuity products and fixed annuity products, very well versed in final expense, decision hearing, some of the other ancillary products that can be very easy. It's funny, you know, I kind of grew up more or less on the IO side, if you will. I've been working here at Senior Market Sales for about a decade, 7 years in my current position with the financial products team. And so, you know, if you go back 10, 15 years ago, it was really SMS is built by agents for agents. And I'm licensed, been licensed for 8 years, and have wrote product. I haven't been in your shoes to where I'm 100% commission driven and I don't have a place to come in and call an office every day at the IMO side. So a lot of my peers are by agent for agent. So everything that we do is really to try to help you become a little better and hone your craft. And I think if you can ask a few questions, it can help get 3, 4, I think the exact number, if you can get 4.8 policies within a household, that's a client that's pretty retained. That's what SMS does, I think, better than most out there, is try to help you find multiple product offerings that you can easily discuss with your clientele, and I'm focusing on annuities right now. So what I'm going to go through, I'm going to do a quick overview of the annuity marketplace today. I do hit some of the pitfalls, some of the negative news. I think annuities are a funny topic because you have some folks that are very passionate for annuities and folks that are very passionate against annuities, and I think it's important to understand both arguments, and why I term this webinar, this presentation, more positioning annuities in your practice. If you're positioning the product correctly for your clients, there's really never an issue. We run into some issues is when maybe it's square peg round hole, and that's why you have a partner like SMS to help make sure you avoid those situations. But I just want to educate a little bit on where that fits. And I'll introduce you to a few of the new tools that SMS has provided to help you, again, differentiate yourself from your competition and help your clients in more ways than maybe just what you're doing today. So I said that if you're not familiar with the fixed indexed annuity space, important to know it's literally doubled in the last 5 to 6 years. The industry has been growing by 20 to 25% fairly consistently in the FIA space. And like I mentioned, this is a webinar I did, 10 months ago, and I had mentioned that since products are evolving, I expect regulation will follow, and then probably about 4 months after I said, and I wasn't the only one to say that, of course, but now we have the DOL rule that's coming in place and is kind of arms about how that's going to be implemented. But there will be, I assume, increased regulation because seeing the industry literally double and grow very rapidly, and that's because you're seeing growth in all areas. You're seeing growth from insurance-only producers. You are now seeing these products offered through the bank channel. You're definitely seeing the walls break down in the securities license world, where most folks might have relied on variable annuities only, and some dealers wouldn't allow the distribution of index products. Those walls are coming down because I think you're seeing the validity for these products. So I think you're well past proof of concept, obviously, with indexed annuities. They work well. It's what your clients want for the uncertainty in retirement if positioned correctly. And so we'll get into that a little bit more shortly. You know, it's important to note that Senior Market Sales does have a relationship with Genesis. Genesis Financial is the actuarial firm firm that patented and created indexed annuities. So literally have Richard Cato and his team of 11 other actuaries that designed and patented this product initially 21 years ago. Design products exclusively for SMS and our carrier partners and a few of our marketing distribution partners as well. So we can get right to the source for our information. There's not a lot of marketing. We have about a dozen marketing partners that are in a position like SMS that can say the same. I'm really not going to hone in on any specific product today. Specifically, generically we'll talk about product, but specifically I won't dive into carrier product because we have them all. We really have all the major players in this space, and that's as much as I'm going to say about it. We have so there's really nothing we can't offer from the product standpoint from different carrier partnerships. And we have a few that are proprietary and unique to MS and to you through Daryl and our relationships. So this is a pretty graph, and I don't have the 2015 figures yet. So looking at the 2014, 2013 figures, all I really want you to focus in on is both you're seeing in deferred income annuity products, as well as the decline in variable annuities. Because I think when talking to our clients, guaranteed lifetime income is usually top of mind for those folks entering in or near retirement. And in retirement, often it may not be as much about income, maybe more safety and accumulation. And those are really the top two reasons why we're positioning indexed annuities. We'll talk about some of the negatives now. I just want to focus on I think the industry has weeded a lot of these problems out, but it's important to know them because if you are talking to a client about an annuity product, you know, there's a very good chance as soon as you're done with your presentation or you go through the basics that you leave and your client will jump on Google, right? They might Google annuities, they might Google a carrier, you know, you don't really know what they'll do when you're gone. There's a lot of information out there. There's a lot of information both for and against annuities. So I think it's important to know some of the common objections you'll get before you get them, and we can hash some of those out. One that we used to get a lot, it's fading a little bit, but my advisors still hear it every day. When I'm on the phones, I hear this. That's the black box analogy. It's confusing. There's crediting formulas. I don't get it. You know, we really have some products that have simplified that message. I think if you do go back 10, 15 years ago, and Ed, if you've been writing, you may be able to agree with me here that if you have the monthly crediting strategies and the monthly sum, and then you have the annual point-to-point, and then you have a few, you know, a spread, some other things to factor in, it can be confusing. That's probably a trap you don't make very often. You simplify it for your client and you explain the best solution, but it can be confusing if you're just out there doing a search and Polar might be out there for them. So that's our job to make it simple, and it's my job to help you understand how we can make it simple, and I think we do that very effectively. The other problem I think you run into on indexed annuities, more so than fixed, fixed are pretty straightforward, promising equity-like returns. You're starting to see some of these carriers come out with uncapped crediting strategies, meaning you have upside potential above and beyond the usual cap. I think it's important to have the realistic expectation for a client that shouldn't exceed. Some numbers we'll go through. I mean, I think 3 to 4 to 6% on some of these FIAs could be the real house to too high for the accumulation models we're looking for. So, you know, promising equity-like returns or all the upside with no downside just doesn't really make sense to me because that's not how these products are really designed to perform. You know, if you just Googled it, you'll probably find some of these 15 to 20-year products with 20-year surrender charge schedules. For the most part, those are gone. There may be some carriers that still promote those products. You won't hear them come out of my mouth. I won't suggest surrender charge schedules for the wrong person for the wrong reasons. And there are products now that may have 10 to 15-year surrender charge schedules, but there's advanced liquidity features built in, and there's usually lower surrender charge schedules than the old, you know, 20-25% surrender charges. You don't really see that very much anymore, but it's a common objection for folks that don't want to, quote-unquote, tie their money up. And I don't like using that verbiage because I don't really feel you are, but you will hear that a lot. If there's a 8 or a 10-year product, the client may object to, well, I just don't know over the next 8 to 10 years if I'm willing to commit dollars for that long term. So there are So we'll talk about overcoming that objection as well. And I'm on the rider trap, and it's I don't blame the agents for this. I blame us. And by us, I mean more my peers than SMS. I think SMS does a good job letting you know what the product is versus the riders, but how consumers work when you leave the house. Sometimes they remember what they want to remember, but the industry has almost created a problem with some of these guaranteed income riders. And the potential problem I see there is the riders could have some significant guarantees, but the guarantees are only linked to annuitization or lifetime income value, and it's not a walkaway number. And, I'll give you an example. A lot of income riders out there may guarantee 5 to 7% per year guaranteed growth, as long as you're going to take a lifetime income guarantee from that. So it's really a separate base or benefit-based number. Years down the road, what your client's going to remember is I've got 7% guaranteed. It's important to, at point of sale, one thing I like to do is just draw a T line, explain what the income values could be, explain what the account value and the cash values can be. And we've got a couple of very easy ways, pending product and rider choice, to help a client understand that. I just want to make sure you don't fall into the rider trap, which is only being able to sell income or the rider benefits. You're going to run into a lot of clientele that are 65 or older. They don't necessarily need to guarantee a lifetime income, especially your more affluent clients. They may not need income at all. So you need to be able to explain safety, potential growth, potential legacy planning. It may not always be income, but the industry right now has kind of been obsessing over the income and the riders, and rightfully so. There's some really strong benefits there, but it's important to, again, position the product correctly within the minds of your clients. So, if anyone has any questions or want me to slow down, back up, interject any time, this can be as informal as it needs to be, so feel free to stop me as I go through this. Your top 3 reasons why we see indexed annuities or really fixed annuities being for our clientele. Right, the number one reason really is guaranteed income. And I talked about the rider trap moments ago. The riders do provide some significant guarantees and certainty to our clients. We found, and you can look at a number of different studies that would suggest the same, one of the top concerns pre-retirees have going into retirement is healthcare. The risks of healthcare, the rising costs of healthcare. You guys are addressing that concern for your clients, which is phenomenal because I'll tell you, I have a lot of advisors that don't. So talking Medicare is extremely important to help them navigate that Medicare maze. Once you've done that, another opportunity for you is to address the number 2 concern. And it's really not that difficult to start the conversation because we're already talking, and I'll give you a very concise way to explain this later, but some certainties they're going to have as far as expenses concerned in retirement. During the Advantage season, and of course if you're writing Medicare supplements, then you might have your typical premium, your expense, your Part B deductible, all those expenses. Very simple question is, you're going to have X dollars per year for Mr. and Mrs. just to offset their own medical expenses. How for those? What if show them a way that we could guarantee enough income, even on an increasing income basis, meaning the paycheck you get first will be the smallest because you'll have an increasing income as time goes on to offset some of those known medical expenses. The top carriers in the industry, actually, that happens to be Allianz. They're the number 1 insurer of fixed and indexed annuities currently. Their regional came out to see us, and his presentation was all about Medicare. And I interrupted him. I said, you do realize that we're one of the largest Medicare operations in the country, right? And he said, no, we've been spending countless hours trying to educate our workforce on how Medicare works because most people don't know it. If you get one thing out of today, know that you are light years ahead of a lot of folks on the financial planning side because they don't understand how Medicare works. A lot don't. So you can start there. Number 1 concern your clientele has, you can work backwards with a lot of these folks that may want to look at the guaranteed income opportunities, which, again, is the number 2 concern for most of our folks entering into retirement is the fear of outliving their nest egg. How much do we withdraw when? We have some proprietary tools to help maximize Social Security that come up often as well. So being able to know what you know about Medicare and fill those gaps with Med-Sup policy. The same can be true with an annuity. If you're helping to maximize Social Security, how would you need to offset your fixed income in retirement? In Social Security, an annuity can be used to fill those same gaps. So that right now is the number one concept, if you will. It's the guaranteed income. It's seeing some products that will make sure you cannot outlive your income. Increasing income has been popular, as well as you're starting to see more single and joint life payout options. You also see potential retirement benefits. Folks 65 or older may no longer be able to get some long-term care benefit built into a traditional plan. Underwriting may not be in their favor any longer. Annuities do offer confined benefits to the tune of doubling their guaranteed lifetime income should they be confined, should they have a 2 of 6 ADL trigger. We have a number of products that are finding a way to build in some kind of additional liquidity feature around confinement. And my number one suggestion, this isn't a replacement of long-term care. There's some asset-based long-term care models and products that we have that offer a unique solution as well, but it's a great supplement. So keep in mind as we're talking about guaranteed income, and if you're thinking about some clients that you know, due to health reasons, there's no chance they're going to go through underwriting. That's a good reason to reach out to me after this call so I can explain a little more about some of the confinement benefits and how an annuity may be suitable for them. Regulation and safety would be, I'd say, our number 2 objective for solicitation on an annuity, because most folks right now, high market volatility, they don't want the ups and downs of the market. If they have cash sitting at the bank, what are they really getting there? Maybe half a point, depending where they might be. We have some very unique solutions right now to the tune of 2.85 to 3% guaranteed per year for 5 years, very much a CD-like comparison. There are some products out there that be very straightforward and give a client what they want through an insurance company rather than a bank, providing the same kind of guarantees, safety from the market. So that's always, I think there's 2 or 3 e-stories to be able to share with your clientele that I would kind of keep in my back pocket. And there are questions that you'd be able to ask to uncover some of those opportunities. And I'll go through the questions here in a moment. Transfer vehicle, we talk a little, some of the advanced conversations that you may get into for some of your more affluent clientele might be non-qualified or qualified stretch IRA concepts, ways to transfer IRAs from one to the next generation in a tax-efficient basis. We have access to a number of different advanced sales models and advanced sales folks. There really is, if you're dealing with clients that may have some elaborate trusts, there isn't anything that we can assist with or connect you to the right folks for advanced sales as well. So you will find some wealth transfer vehicles. And life insurance is the only way to do a tax-free death benefit, but not everyone can qualify for life insurance and get through underwriting. So annuities can provide some additional guaranteed growth